equal weighted in single stocks.
34.56. That's your power pick of the day.
Welcome back to Power Trading Radio Live and your host, Merlin Rothfeld, with today's special guest.
Welcome back to Power Trading Radio, everyone. It is Merlin Rothfeld, and it's my very special guest, Paul Buzby. He's the Director of Education, or Director of Economic Research at Rare Coin Wholesalers. Paul, welcome back.
Good to see you again, Merlin.
Last time around the program, well, we went over many different areas of the big economy. We talked about some red flags. But before we dive into any of that, tell our listeners a little bit about yourself and kind of how does one get to be the Director of Economic Research? That's a lofty title there.
Basically, working at the company for 4 years and earning my way up to it. Basically, when I started here with Steve Contursi, he realized I knew a lot about the economy, based on my background, my education, and he wanted me to start following it up for the company. And over the years, it just kind of developed into something much bigger than originally was planned.
It's a good thing. We had the opportunity to meet many years ago. I think it was in San Francisco was our first encounter, and it was interesting. Last year, I think it was last year, you actually, we were talking at one of the conferences, and he says, look, read this paper. I wrote this, and it basically was talking about why you should get out of gold. And I know it seems impossible to think that a coin, someone involved in the coin industry would tell you, get out of gold. But your article was very well written, and I think that anybody can have a plan or a hypothesis about where the markets are going to go. And your argument, you had several very clear-cut arguments as why you might want to get out of your gold positions for example number 1, example number 2, example number 3. Today, no different. We've got another article that you've written here talking about our economy and, you know, many people feeling that we're in a pretty bad place. Some actually think we're doing fairly well. Of course, I don't know really what they're on at this moment in time. But let's start with, what are these 3 steps that you talked about that really could get America back to that moment of prosperity, which I think every American wants?
Right. Well, right off the bat, the reason I've been saying get out of gold and silver, if everyone has to notice, it's been pretty flat for the last year and a half. Mm-hmm. Been sitting between 1,600 and 1,700 for that whole time frame. And there are some things that the economy needs before it's going to move forward. All right, first it needs stability, it needs investment capital, and it needs a competitive advantage. Mm-hmm. Now those 3 things are looming around the corner, but until they get put into play, the U.S. economy is not going to recover. And when they do start happening, this is the time where a lot of movement on the stock market, mm-hmm. This is where a lot of money can be made if you're ahead of the game. First thing, let's deal with stability. For the last 4 years, the United States private sectors had zero stability. They didn't know what the tax codes were going to be. They didn't know what the regulations were going to be. They didn't know what the spending was going to be. They could, if they wanted to put a business plan that they could take to the bank and the bank would take serious, they couldn't do it. The banks would just laugh at them.
Right.
All right. So basically, they need some stability. Now, basically, the election was all about this. The government had 2 choices: 1, cut spending, or 2, raise taxes. It's very obvious how the votes went, the direction this country's going. We are going to raise taxes.
Surprise, surprise.
Surprise, surprise. Now that they got the people in who are going to raise the taxes, they're going to get all these taxes in place over the next couple months. We saw a lot of taxes come in through the fiscal cliff compromise.
If we can call it that. I mean,
okay. I'm just using the term
Good,
everyone's
okay.
comfortable with.
You're the political politician.
Yeah,
here.
okay. We got more taxes and more loopholes that are going to kick in with the spending sequester. Mm-hmm. We have more taxes and loopholes that are going to come in with the debt ceiling limit. So we have a lot more taxes coming down the road in the next 3 months.
And why 3 months? I noticed you in your article you outlined April, saying that's when we're going to get the definitive line in the sand.
Well, before, you notice they've been kicking the can down the road, mm-hmm. on debt ceiling limit, on spending, on cuts, on taxes, everything for the last 2 years.
That's all I know is the can being kicked.
Right. So. It's political theater.
Right.
They had to decide which way they were going to go. Well, they decided which way they were going to go, raise taxes. Now that the people are in, they're going to get those taxes raised. When those taxes are raised, then they want the economy to recover then. There's actually an agenda by the government at some point for this economy to recover, believe it or not. It comes down to this. Basically, all these taxes will be, most of the taxes, not all, but most of the taxes will be in play as long as they don't kick the can down the road again on the debt ceiling and on the spending sequester. There's some political reasons not to do them, but they're kind of running out of clock time. So there's a good chance they'll bargain on both of them. The debt ceiling limit will be raised, but not as much as they want.
Right.
And the spending cuts, there will be some, but not as many as they want, and they will be made permanent. So we'll at least have, the can won't be kicked down the road anymore.
Right. So, most people say the financial markets hate uncertainty. So what you're saying is, with this definitive tax, not definitive, but at least largely set tax brackets or codes, whatever you want to call them, that'll give some stability to the markets for your component number one.
Correct. And also all the regulations, they're going to roll those out, the majority of them in the next 3 months. What the spending is going to be rolled out in those 3 months. So you're not going to like the taxes, you're not going to like the regulations, you're not going to like the spending, but at least they'll be permanent, you'll know what they are, and you can plan around them.
Look, every American is whining and complaining about how high taxes are. If you really feel that way, go back to 1960s when we were talking 70% taxes. Of course, there's ways around it, but still, we're in a very low tax period anyway, so a little bit of increase. Let's not get
all right.
All right, let's go to number two.
So first we get stability. Next we need investment capital. This is one of the things I love most. Quantitative easing, talking about an oxymoron statement. There is no investment capital available in the United States. It is all tied up. The Federal Reserve, 10 private banks, chartered with the United States government to print its bonds, treasuries, basically has purchased $2.82 trillion. But Operation Twist, every time some of that's going to roll over and become available for investment capital, gets rolled over by Operation Twist back into more bonds and treasuries, not available. QE1, QE2, QE3, $2 trillion, again, in bonds and treasuries, won't mature for 3 to 6, 10 years, not available for investment capital for the private sector. The Federal Reserve has the interest rates at basically 0 to 0.25%. Banks have 0 to 0.25% incentive to lend money, which the risk to return is not there for them, so they raise the criteria so high, nobody can get, no private business, small businesses,
it's not in their interest to loan
not in their interest. So U.S. banks are sitting on $11 trillion. They're buying bonds and treasuries, getting a guaranteed 3% return. Private businesses account for about 70% of the U.S. GDP. They can't get a loan for the last 3.5 years, so they built up massive capital reserves. I think they're sitting on around $3 trillion just sitting there to deal with little issues they used to go to the bank and get a loan for. And then corporations in the United States have $4 trillion outside the United States for tax reasons, can't bring it in. If you total all that up...
They can. They just realize that we're going to have to pay huge taxes.
It's not worth it.
Right, exactly.
All these things, it's just not worth it to make that money available.
Right.
So basically $23 trillion is not available for investment capital. And
just a small amount, right?
Just
23 trillion.
I mean, you're talking about a big number.
Yeah.
This is what's holding the U.S. economy hostage. And it's hostage is what it is. So basically, there were some changes here just in the last 2 months. Before the election, basically we saw the Federal Reserve say we're not raising interest rates until mid-2015. We're not QE3 forever, quantitative easing Operation Twist forever. The stock market went up, commodities went up, foreign economies went up. Everyone was happy, and they elected us a president for another 4 years. Literally, a month later, Ben Bernanke comes out in December and makes a 180-degree turn. He says, well, instead of waiting till arbitrary date in the middle of 2015 to raise interest rates, we're going to look at raising interest rates when unemployment nears 6.5% or inflation nears 2.5%, which that could happen this year.
Let's do this. I know you got one more on here I want to get to. Make sure we talk about that one. So we've talked about the first two elements, which is what would get America back on track. Some interesting stuff. Stability is number one out there. Number two is that capital, which John O'Donnell and I have talked about a lot, about getting that capital back into the markets. Right now these banks are just sitting on it, doing nothing, and they should be loaning it out, but they're not because there's no interest. Maybe this will spark the interest in these banks to lend the money out. I've been looking at these articles. You get a lot of postings. To get more information and to see these articles in depth and kind of get all the details of it, you can go to rarecoinwholesalers.com. There's a resource tab on there, and we'll talk about this when we come back after a quick break. But TJ, if you'd show this one, there's a lot of articles on here, and we've talked about some of these in the past, such as the red flags report, which I would encourage everybody out there to read. And TJ just brought it up there full screen for you. This is under the resources tab at rarecoinwholesalers.com, and the articles we were talking about there, I believe, are from your recent blog post. talking to Paul Buzby, who's the Director of Economic Research for Rare Coin Wholesalers. When we come back, we'll dive into point number 3. We'll talk about some red flags for gold buyers out there, and then we're going to talk about something very interesting, which is a live traded account for coins, not just gold, but all kinds of coins, as a very different type of investment vehicle, which I think most people might find a bit unique. So we'll talk about that as soon as we come back after a quick break. If you have questions for Paul or myself, Power Blast us at powertradingradio.com. We'll be right back.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothfeld with you for your Thursday edition, talking about several steps that could potentially get America back on track. These are in the blog posted by Paul Buzby, and he's the Director of Economic Research for Rare Coin Wholesalers. Now, we ran through step number 1, which was stability in taxes. I get it. We want to make sure we have numbers in place as opposed to this open-ended question where nobody knows what the heck is going on. Number 2, he talked about getting that money that the banks are just sitting on, doing nothing, getting risk-free interest, getting that out in the market. And what's point number 3 here?
Well, point number 3 is basically we need a competitive advantage in the United States. All right?
I'm laughing at that one.
I know it is.
Cheap labor, no?
No. It's the energy industry, and most people are already getting aware of what's going on in the energy industry. Pretty straightforward is there are 2 new technologies everyone's aware of, sideways drilling and fracturing, are not just U.S. game changers, they're world game changers. All right? In this year alone, we will see about 300,000 to 400,000 jobs just in the energy industry alone. Basically, they're forecasting within 2 to 3 years a 2 to 3% GDP bump just from the energy industry alone. Okay.
Considering that we're not even at 2 to 3 at this point,
we're not even at, and it's just by itself. Okay. Right. What it is, it's kind of a linear progression, though. There are only so many rigs; they can only drill so many holes a day. But just a slight increase in supply of oil affects futures big. We all know this. Yeah. All right. And so what's going to happen is right now we produce about 70% of our own energy. In order, hydro, nuclear, coal, oil, natural gas. Alternatives account for a whopping 3% of that 70%. The other 30% is heavy crude oil imported in. On private land alone, remember about 50% of the energy reserves is on public land. The administration will keep that tied up.
Sure.
But the private land is under control of the states. The states are broke, need the money, they're going to develop the land. On private land alone, within 5 years, we can be up to 75%, 10 years, 85%, 20 years, 100% of our own energy inside the United States.
You hear that, Saudi Arabia? You hear that?
Yeah, basically the Middle East within about 20 years has become Europe's and Asia's problem, not the U.S. problem. All right. So, but when you're looking at energy, remember, it's profitable at sideways drilling and fracturing is profitable at $65 a barrel in shale oil, heavy crude oil. So areas like the Gulf, Texas, Oklahoma, Pennsylvania, Southern California, these are heavy crude oil and shale oil areas. You get up into the light sweet grade oil areas like North Dakota, which they found out looks like that area extends down into Mississippi now. They're just figuring that out.
Jeez. And I see like the Wyoming hillbillies going on now, right?
You got it. You got Wyoming, you got Northern California. It's profitable at $16 a barrel in those areas.
Wow.
Yeah, so this is where a lot of this recuperation is going to come from, what's going to pull, that's what's going to lead the U.S. out, because guess what happens to trucks, trains, jets, agriculture, and manufacturing when oil drops down to around $65 a barrel? That's the competitive advantage.
Sure, and I'll end this segment here with a nice little slide. I'm going to actually show you guys, TJ, bring this one up full screen. I'm going to show you kind of an industry comparison from this, let's get this, there we go. About the different major sectors in the U.S. And you can see that obviously financials are doing very well, but you have, since 2012, energy up 15%, which is just a hair under that S&P 500. But based off this knowledge, there may be more of a surge towards energy, and I think that that could be in the form of some non-traditional areas. And you talked about wind, but natural gas, especially in oil in the U.S., could become a major boom going forward over the next few years. So something for you guys to think about with regards to what could get America back on track. A competitive advantage, kind of an interesting one to say, because it seems like we've lost our competitive advantage in many areas. It'd be great to see us have a nice one to hang our hat on here going forward. Now, let's take a quick break. Again, if you guys have questions for Paul or myself, Power Blast us out at powertradingradio.com. We're more than happy to talk about whatever you like to talk about today, preferably macroeconomic or gold or coins. When we come back, we're going to talk about gold specifically, there's a red flag sheet that Rare Coin Wholesalers puts on their website. You can get it for free by going to rarecoinwholesalers.com and clicking on resources. This red flag sheet will really make you aware of some of the big things you need to pay attention to when going out there and buying gold coins. I'm giving away gold coins on the show every Friday. I know they're legit because I'm getting them from Rare Coin Wholesalers, so I know that they're legit. But many of you might be buying a bar of lead covered in gold paint and not know what you're getting. So we're going to talk about that when we come back after a quick break, as well as tell you about a coin that in 1940 sold for $1,200 and just last week sold for $10 million. I'm sure everybody would have liked that one. You might not catch that one, but maybe there's something else that we can show you on PowerTradingRadio.com. We'll take a quick break. If you have questions, Power Blast us. We'll be right back.
Cool.
This is Power Trading Radio Live. Real people, real money.